Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. It's coming down hard here in Mumbai in terms of the downpour. Still not morning because it's kind of dark out there. That's the kind of weather, and maybe true for the market from overnight as well, which we will discuss in great detail. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Sonia and Nigel. Guys, morning.
Hi, good morning Prashant, good morning Nigel. So dark clouds on the market as well, right? And it was pretty gloomy as you stepped out of your home this morning. Hopefully that won't rub off on the markets, but looks like it's going to be a tough day.
Well, it's going to be an action-packed day and the bulls have their hands full. So let's get straight to the action, Prashant.
Oh, absolutely. And I just hope it's passing clouds, right? Not
Doesn't look like
for
actually.
The next 10 days. But it's a bit of a pullback, and I think, there's no other way to sort of put it. It's an ugly, ugly session from Wall Street. So you have basically the S&P 500, which was down about 2.5%. The Nasdaq was down 3.6%. The CBOE Wix jumped 22.5%. Just sort of take those numbers in because they are large cuts. When is the last time you had? I mean, actually, I don't think we've had a 2% plus cut on the S&P for the last 300 plus days. And of course, Nasdaq down almost, it's closer to 4 than it is to 3, right? So those are large cuts. And the jump in Wix as well. Now, it's earnings which have disappointed. It's not the macro indicators, macro markets which have moved. If you're wondering if yields have gone crazy or dollar has seen a knee-jerk sell-off or nothing, it's earnings. Tesla, of course, we had the numbers because the numbers came out the previous session after hours, and the stock reacted in a significant way. It was down about 12%. Ford came out with earnings. I mean, that's an indicator of sort of the manufacturing real economy, health of the consumer, etc. That was down about 11%. You also had Nvidia, which was down 7%. And it's not as if Nvidia reported numbers. Google reported numbers, and essentially there was disappointment. I'll tell you why. Because Google said that they spent $13 billion in the quarter they reported for in terms of capex, and they said next quarter also we'll spend $13 billion. So there was no growth in capex from Google. And what does Google spend on? A large portion of it would be servers, etc. That's where Nvidia's chips would go into. And that is the reason why Nvidia sold off 7%. Actually, the sell-off, in these AI semiconductor stocks like Nvidia, Taiwan Semi, and others, etc., started middle of last week when some of those reported numbers, and it's kind of picked up pace with Google reporting numbers. Google numbers, mind you, by themselves were pretty solid. The search business has done very well. YouTube, maybe it's a bit of a miss. It's got implications for listed stocks here in India as well, which we can come to a little later. But, you'll need confirmation, right? Is this like a one-off thing, or is this a trend? So we'll have Microsoft, Meta, and Amazon all reporting numbers next week. So those are the other sort of magnificent 7 companies which will report. In terms of data, in economic data, there is the second quarter GDP numbers and jobless claims later this week, today and then on Friday. Core PCE on Friday. I think it's a closely watched inflation gauge by the Fed. So sort of putting all of this back and looking at the Nifty here. Yesterday was a session where the Nifty was flat. Broader markets rallied hard. Small cap index was up 2%. Mid cap index was up 1%. Nifty did nothing. But the Nifty did defend the 20-day moving average at 24,346. And it defended it successfully. I think that comes under a bit of a test once again. Remember, the Nifty Bank and the mid-cap and the small-cap indices had all broken the 20-day average while the Nifty had defended it. On the downside, watch the panic low on the day of the budget, which was made immediately after those announcements, which is 24,074. And if that goes, 40-day exponential comes into play, which is 23,860 odd levels for the Nifty. Coming to the Nifty Bank, we broke below the 40-day exponential, which is 51,292, but we ended marginally above that, right? So that is, again, the key level to watch out for. And on the upside, I'm not putting out upside levels because you basically need a break above the recent highs for continuation, which is not the case today. I just want to end with this one point. If you look at the F&O positioning, FIIs were super long and HNIs were super short. Both have moderated their positions quite a bit. FIIs have cut longs dramatically. The long positions are about 2.4 lakh contracts. It was about 3.9. And clients have cut short positions. It's now only at about 55,000 contracts as of yesterday's close. GIFT Nifty will come up on your screen. The global handoff is pronouncedly negative, and there isn't very much by news flow in terms of the budget or earnings for that matter. And it's not so much the budget, but look at the earnings momentum, which has been slowing down. very few surprises on the upside and more disappointments, I think, which doesn't help at the margin. So 200-point lower, I think those levels that I mentioned will be important, especially the budget day panic low. I mean, I think that must stay if we are to go into a slightly sideways kind of a price action. Otherwise, you're looking at slightly lower levels from here. Sonia.
Absolutely. And, I think that perhaps the budget day hangover's not up just yet, right? Now people are waking up to the fact that they have to pay a lot more taxes, whether it is long-term capital gains on equities, whether it is on real estate. So I guess that ramification also is something that could play out in the market over the next couple of days. But I take your point entirely. Today, the main reason for the weakness could be what's happening across the globe. It was a 500-point slide that the market saw, the Dow saw rather, and the Nasdaq has seen its worst day since 2022. The Nifty so far has been holding on to 24,400, but we are expecting some sort of pressure today. Foreign investors actually sold big time and sold for the second straight day. So I think put together in about 2 days, it's almost 8,000 crores of selling that we've seen from FIIs. And this is peculiar given that we've seen so much buying up until now. So maybe time to sit up and be a bit cautious. A lot of stocks in focus today. Some of the big numbers that will come out include Tech Mahindra, Ashok Leyland, DLF will be reporting their numbers. So keep that on your radar. And in terms of result reactions, Axis Bank would be on the downside because we did see operational weakness come in for Axis Bank this time around. And L&T numbers were decent. Execution was a bit of an issue, but 15% revenue growth, profits up almost about 12%. No negative surprises in the numbers, but nothing great either. So, just keep an eye out on some of these names. But Nigel, over to you. What are you tracking?
Well, the bulls are facing the headwinds this morning. The question is, can they fight back? Because that's the big question, going by the kind of downtick that we're likely to see on the GIFT Nifty, what the GIFT Nifty is indicating. And today we have the monthly expiry as well, both on the Nifty as well as the Nifty Bank. The headwinds are the global markets are weak, earnings, nothing really to write home about, and the FI selling, that's intensifying. For the time being, you have the DIs which are combating that, and their participation has been higher than the FIs. So they've been absorbing a lot of that selling. What about the FIs and index futures? Well, they unbound some long positions, but they added shorts. If you're asking for shorts in the system, well, you've got it. Close to 40,000 contracts is what they've added. And now the short positioning has moved up from around that 15% earlier in the series to around 31%. And the chart will tell you the picture. The FIs, they've cut their longs. They were closer to around 4 lakh contracts odd. It's come down to around 2.4 lakh contracts odd. I personally like to see some shorts in the system because it gives you some reason to see a bit of a short covering bounce. So that's one data point. The other one is the client positioning. It was close to 3 lakh contracts at the start of this series, and now that's come down to only around 55,000 contracts odd. So the clients covering the short positions, the FIs lightening the long positions as well. It's an interesting positioning getting into the next series. But for today, let's look at the options data. You had a couple of strikes that were very active. 24,400 call, 24,400 put, very, very active. If there's a strategy going on out there, then it's a short straddle. That's you write the, both these two strikes and you pocket the premium, which on an average is around 200 rupees, which means that those writers, they are hoping that the 24,200 level is protected in today's trading session. That's going to be the important mark because we're likely to start off very, very close to that mark. Let's get to the levels then that we're looking at. The support level, very important, where we're going to be starting off. And that's why I'm saying that that's the important level going by the options data. You have the lows that we saw earlier this week. That's the other reference point. And the 20-day MA, that gets breached. At some point of time, the bulls will want to fight back and get it closer to around the 20-day MA. So that's important. The problem pocket has been the Nifty Bank because that's making lower lows on a day-to-day basis. And just take a look at it. In the last few sessions, it's been making lower lows. That's a problem pocket. But for the Nifty Bank, 50,500, 50,600, extremely important. And a few reasons come up for you on the screen. That means that's a 5% correction from the recent peak. So that's why this level is important. The recent low is around, that mark. And also the 50-day MA in this vicinity. So this is crucial that the Nifty Bank defends this mark. Yesterday, it bounced off 500 points, this level. So keep an eye out on that one.
Okay, so looks like it's going to be a very tough day today. Don't forget that we have, not just a lot of big numbers, but a lot of result reactions as well. And not looking great on that front. So let's get you some opinion on how to approach the markets now. Jonathan Garner of Morgan Stanley says that in Asia, they book profits on their long-standing IT, overweight, they move to equal weight on elevated relative performance, valuations and crowded ownership. He notes that the change in Asia market leadership historically occurs ahead of the first Fed cut. He upgrades consumer staples ex-China to overweight for defensive domestic oriented growth.
Okay, some money market views here. This is Parul Mikkelsen of Standard Chartered Bank, who says the rupee has been range-bound in a narrow band between 83.65 to 83.73 to the dollar as it continued its gradual depreciation amid higher demand from oil importers and a stable dollar. She says the rupee could continue its gradual depreciation if we see FPI outflows in the period ahead. She expects the dollar INR to trade in a range of between 83.5 to 84 to the dollar in the near term.
And on the bonds, Parul says the budget surprised the markets by targeting a fiscal deficit at 4.9% of GDP, narrower than the 5.1% in the interim budget. She says the dated borrowing was reduced by 0.12 trillion rupees and T-bills were lowered by 1 trillion rupees respectively, and this led to short-end Indian government bond yields moving lower, while the long end remained flat. She says better than expected fiscal consolidation target led to good receiving interest in overnight index swaps. She expects the 10-year benchmark bond yield to trade in a range of 6.93 to 7% in the near term.